back to
So
CPJ.
I
We're
think we're
talking
talking
about
about like
the
them.
takeover bid and
Well, the takeover bid that hasn't dropped yet at the time we're recording. It'll probably drop. I could actually calculate when it would drop. Probably within the next. When was this? Like next 2 weeks or so?
Yeah, because they bought
When
the
was the
stake.
trade?
When was it? December 6th.
How much is
So
the time? Is it 30 days? So
I need to review the rules
so probably
because I don't know why I thought it was 21, but it couldn't be 21 days.
Well, it depends how many days, because if it counts working days or trading, well, working days. But probably within like the next week or so, you'll probably see it. So yeah. And I want to think, like, do you think? I was wondering what price that they would buy it at, because with the mention with the trades, because it was like when CBJ was the first big trade, which was July 9th, that was like at $10.50. Then the second trade, which was, which day I said? December 6th. That was at $8.05. So I was wondering which price is it going to be at? Would it be at the most recent price, which is the $8.05, or would it be at the $10.50? I think it'd probably be more at the lower price, though. It was even looking at something like this, and I was thinking that.
Wait, can you repeat? This is what are you asking?
Like which price when the takeover bid comes, when they're like, hey, they're gonna approach the
shareholders.
So we should say like based on
the companies, all of those things, like what's a takeover?
Yeah, so based on like certain rules, like the Companies Act, JSE rules, whatever, or even like Securities Act, the rules or those laws, companies laws, say that, hey, if you have a business and you used to control the business, so you used to own, over 50% of the business. So say you own 60% of your business. If someone is approaching you to buy your business, and then they buy the business from you, there are going to be other shareholders in the business other than you. So that person could take the 60% and they now control the company, but the other shareholders should get an offer to be able to sell their shares if they want. So that's what the takeover bid is essentially going to be. So it's going to be Ace Bryden saying, hey, they're going to put out a document just like a prospectus, like an IPO prospectus, APO prospectus, or secondary offering prospectus. If you know, you know.
If you know, you know.
The real fans. And so they are going to ask CPJ shareholders, would you want to sell us your shares? There will likely be limits because I don't think that they want to delist CPJ. Because the rules would then say that they couldn't buy more than 80% of the company. Yeah. So based on, I think I was working it out. So they own right now like 75% of the company. So if they were to, they essentially can buy up to that 80%, which would be about 4.72%. And I worked out the amount of units that would be and then what price that would be. They could, if they do it at the $8.05 or the $10.50, that's between 400 to 500 mil Jamaican. So I don't expect them to delist it though.
It's 30 days actually.
It's 30 days. Okay. Does it specify working days or
to extend where you read it from? Mandatory offer? So I'm just
that's the CPJ
I'm
notice?
looking through the main, but I'm also looking through the main market rule book. Consistent with objectives.
But I was because I was trying to say something that I was thinking that you mentioned that that would be an example almost of arbitrage, because when they did the second buy, they bought at $8.05. So my understanding of the rule is right. I think it's the trade at which you control the company that you have to. No, but I don't think you actually have to offer Yeah, I think it's the same price. Everybody's supposed to get the same price. It's not like you can buy
Yes.
my units at 10 when you control the company versus. I'm mentioning why the Mayberry probably. Oh, okay. So, can you meds that they did the first transaction July 9th,
Yeah.
which was I think Mayberry Jamaican Equities selling, and I think
And
that was also
Markart.
Tom and Mark sold some,
Yeah.
but they still had some
On top.
left. Mayberry sold everything.
Mm-hmm.
That was a 10.50, and then they did another transaction which was at the $8.05. But I think the $8.05 buy is when they actually control the company, and then they would have to do the mandatory
Awful.
takeover bit. Yeah.
Yeah.
So then I think my understanding is that means the takeover bid would have to come out at $8.05. So I just mentioned that you meant that you had, I think that'd be an example of arbitrage, because if you saw that, hey, they have to buy the shares. Well, they don't have to buy your shares technically, but the price would be $8.05. Then anything below $8.05 would be somewhat of a guaranteed gain. I mean, it's not like a heavy gain though, because most of the days they didn't trade below that. But yeah, that's interesting. Interesting. Yeah.
Yeah.
But yeah,
No,
that was.
I think I understand what you're saying. I do know.
Yeah.
I do understand what you're saying.
If I remember there was one of the books we were talking about like Buffett before. Like one of the books I read from. Well, it's not he directly wrote it, but it's like, I think it was a book where it took transcripts from like his earnings calls and investor briefings. He speaks a lot about like arbitrage and those kind of stuff where it's like, okay, they would do that because, say, I remember there was a time you follow like the US market, or just going on random tangents. Like there was a time where Microsoft was considering buying Activision, which is like a gaming company, I think. I don't know if it did it end up going through? I remember there was like I feel like there was a price that they maybe had announced that they would possibly do it at. And then say it's like I'm saying, I'm planning to buy your shares at say $50. But the deal is pending regulatory approval. So there's a chance I may not be able to buy it at 50. But I'm saying if I buy it, I'm going to try to buy it at 50. And then what if over the next year the stock drops to like $40? Maybe people are like, oh, I don't know if it's going to happen, da-da-da, they're kind of scared, da-da-da. You could then buy it at $40, and then if the deal goes through, you already know your gain, and it's not a guaranteed gain, but it's like you can know, hey, this is a good gain for you, depending on even like the volumes that you could get.
Maybe a 25% gain, because you could sell at 50. Yeah.
Or sometimes it can be readjusted. The price could be, what if when it finally goes through, the deal is actually $60 they're buying it at. I don't know if I should probably check what exactly happened with. Oh, see, Microsoft announced its intent to acquire Activision Blizzard in January 2022 for $68.7 billion, and the deal was completed for $75 billion. So it was actually technically even higher, but it was then October 2023. So that would be an example of arbitrage if it was traded on the market, like a public stock exchange. But yeah, that was just a random tangent. What were we talking about? Yeah, we're seeing them buying AS Brad and buying CPJ, and yeah, I thought they're gonna delist it still. But I guess the takeover bid, like the takeover document, would like talk about that kind of stuff.
I wonder, why do you call it arbitrage?
Isn't that's not the term for it?
But I'm not entirely sure. My understanding of arbitrage is more like it's different exchanges or so on, or markets or something like that. So it's like, you know how you can buy like the USD and sell the JMD. So you can buy like Transjam USD and sell the JMD equivalent. Like that's arbitrage to me, because it's two different markets.
I don't think it has to be. I don't think arbitrage has to be two different markets. So I think it's more just two different prices. So okay, I'm reading this article, Yahoo Finance, 2016, October 2016. So it said in 1988, Warren Buffett gave the blueprints for trading a weird for trading a weird thing happening right now. So it says AT&T's proposed 108 billion merger with Time Warner. The deal values Time Warner at $107.50 per share. But on trading, shares of Time Warner were down 3% at 86. So they're saying, we're going to buy, we're going to buy the shares at $107, but the shares are trading at 86. So it's way below the implied deal price. And it says, indicating that many in the market aren't sure the deal will close. So then while this discrepancy is a bit weird, it's not unheard of. So initially, jawboning from lawmakers indicate a potential long, drawn-out review process for the deal, and comparisons to the scrutiny faced by Comcast's acquisitions of NB Universal have been... So yeah, essentially people are like, we're not sure if this deal is going to close. And then Warren Buffett and the merger arbitrage, commonly known as merge. So it's like, okay, I guess it's a specific, maybe there's just subtypes of arbitrage. So merger arbitrage is a type.
Yeah.
Strategy that allows investors to profit from ongoing discrepancies between proposed buyouts, offer strikes, and prevailing market prices. So say, for example, you didn't think the AT&T Time Warner deal was going to go through, you might choose to bet against the Time Warner stock. So I guess you could maybe short it. And then alternatively, if you think the deal will close, you'd likely bet, so you go long. So yeah, and it says from time to time, the strategy has been a favorite of someone who has garnered a reputation for not for short-term speculative bets, but long-term investments. Because I think the book spoke about maybe plays that he has made on it.
The book?
I wonder if I can find the book. Yeah, so Warren Buffett arbitrage plays. These would be like the CPJ play, this would be like some...
But you can tie these plays into the same CPJ play. Like I realized learning from these kind of trades and investments.
What is a whole book on it? Warren Buffett and the Art of Stock Arbitrage.
Wow.
Yeah. Okay,
looks like I have a lot to learn. Yeah, we're always learning, guys. Like we never ever say we know everything. We just learn, just like you guys. So don't mind us for just like reading and researching and figuring this out, because even me just asking you, is that like the correct use of the word arbitrage? I genuinely just don't know. So yeah.
Well, yeah, after that wicked tangent, CPJ, the plans that they have outlined